Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market had a choppy week last week as improving news on COVID-19 was met with realities of very bad economic data. Monday saw a negative reaction to the OPEC Plus deal that came out, where the cuts just were not big enough for the market and no way to compensate for the severe drop in demand throughout the world, which continues to get worse. So the markets had kind of a bad start to the week, but Tuesday we saw a big up move in stocks, Amazon driving the NASDAQ up as it moves to a new high, with all of the optimism about Amazon being a huge beneficiary of the online ordering that's going on, and there are a lot of stocks that have benefited from that. We also saw Netflix move up, Microsoft move up, many more. Roku having also a very good week. And on Tuesday, Johnson & Johnson reported good earnings and said they would have a vaccine by April of 21. All of that seemed like it was good news, and the stock market did very well on Tuesday. But Wednesday came and the economic data was much worse. Retail sales, plunged a record amount, 8.7% on the month. And bank earnings came out and they were plunging also, though the banks kind of were priced for that, so they didn't have horrible days. The S&P ended up down about 60. It was down about 90, but then came back later in the day. Thursday was a choppy day, rallied after initial claims for unemployment came out, a little worse than expected, 5.24 million new initial claims for unemployment. That puts about 22 million people out of work. These are depression numbers or worse. And then New York came out and extended their lockdown to the middle of May, so the market didn't like that. But then buyers returned as the NASDAQ again continued to soar to the upside. Again, Amazon driving that, Apple right with it. And then what happened on Thursday is after hours, Gilead came out. Well, it wasn't really Gilead, but they tried to make it seem like Gilead. Came out with a report that their drug, remdesivir, had helped in Chicago 125 people that had COVID-19 improve much more quickly. That sent the indexes through the roof after the close on Thursday. We saw the S&P 500 move up nearly 100 points very quickly, just giant moves, and then it was kind of cooled down a little bit by Gilead as reports actually came out from the company saying that, well, they really did have a long way to go on that, and that was just kind of one little, uncontrolled area that they were trying that. So there's a lot more to go on that. The markets did calm down on Friday, but it was a huge early surge. And the market then suffered from what was a pullback in the NASDAQ as some of these very overbought stocks like Apple and Netflix and Google began to move down as analysts now are downgrading those stocks, which makes a ton of sense. And it just appears that remdesivir, it could be a stock that improves things, hopefully, but it's not, far from proving that it's any kind of a miracle drug. But buyers really want to be in the market. Watch our Thursday stock sectors video. we talked about dissecting the market rebound and looking at 10 key stocks. These are the 10 key stocks I think that are important to watch that have patterns that really extended to the upside. They were the drivers in the market, and very, very narrow amount of stocks that are driving this upside correction. In fact, we saw this huge decline to the downside in the stock market, followed by this huge rebound. This big bungee jump was unprecedented. 35% decline in under a month, and then recovering some 55 to 70% of that, depending on the index you look at. The Russell being well below that, more like recovering 1/3. And, I like to compare things in the charts and look back and say, well, what can I glean out of this? What does it mean? But this isn't in the charts, not in 100 years. This is unprecedented. This is the first time we saw this. The closest I can get to this type of analysis is 1929, where it had a big plunge and then a 50% rebound. And that took much longer. Instead of 1 month down and a couple of weeks up, it was much more like 3 months down and a couple of months up. And that, of course, turned out to be a 10-year depression. But this time, the numbers are much worse than 1929. But information travels much more quickly, and actions by the people in the country or by investors, that those behaviors happen much faster also. So things do move much more quickly than back then in the 1929 to the wartime. But there are some similarities that are very stark, and that is the huge government programs, where they act in some enormous ways to keep prices up. It's really amazing. Not only do they want to keep asset prices up, they would buy up junk bonds that are from companies that are basically falling apart to keep the markets from getting scared at that, and massive programs that they come out with back in 1930s and doing the same thing right now. So where are we? What happens? People get crushed. They have less money. There's growing government dependencies, and the companies are still suffering. There's no way to loan enough money to all of the companies out there. The government would have to print, maybe tens of trillions of dollars to be able to do that. But government, they'll do whatever they can to hold it up and hold prices up, and I think it's absolutely outrageous that they're doing that. It's not 1929, but it's 2020, which is its own kind of bad. It's not your 10-year depression, but maybe it's 2 to 3 years of the worst recession that we have seen since the Great Depression. Let's just say right now that we see investors looking over the valley, and they're buying based on any kind of good news about COVID. They just don't know how far they have to really look over this valley to see to the other side. I think it's a lot worse than they're seeing, and I think what the government doing is so much like back in the Depression time that it scares the crap out of me. That's a market right now that's rebounding, but look for it to run into a lot of trouble real soon. The stock market, the S&P 500, Dow Jones, Russell, they didn't have big changes this week. The big change was in the NASDAQ with this huge surge of about 6%. But I think that's over. The bond market really relatively strong, while the stock market was kind of just sitting there chopping around. Bond market 30 years gained about 2.5 points. The 10-year yields lose about 12 basis points. Gold loses $26 as the flight to safety bid is starting to disappear, pops up near 1,800 and then starts to pull back. And we believe it is in a corrective period, and that the short-term view is going to show you that when we get to the end of the show. The dollar edged up a little bit, really trading in a tightening narrow range. And oil rolled. So some of the prices that you're looking at are a little different. We saw oil down trading around $19, but then June became the spot month, and now pressure is moving back into that contract also. We actually think that that June contract is going to continue to be under pressure, and that lost about $4 on the week. So pressure coming in from this large contango, and we will talk about that in just a little bit as we get to the short-term view. I hope that you are a big fan of this show and a big fan of askSlim. I want to make sure that you know that we put this on YouTube. And like this video, make sure you give us a thumbs up. And if you give us a thumbs down, put a comment on there. Tell us what you don't like so we can keep getting better. Subscribe to this channel and then share it. We put a ton out there every week, and you know, people that you know that like the markets can learn a lot from us. So please do share it also. Follow us on Twitter at askSlim, and write to Matt at askSlim.com for trial memberships. We have a lot of them, and I'm going to speak about more of those coming up. So that is the opening of the show. So now we're going to jump into the best and the worst stocks for the week. There were some giant movers in here, and a lot of them are in this technology category. A lot of them are in the category of stocks that benefit from people staying at home. They're kind of the isolation bid that we've got in there. You know, those are the Rokus and Amazon and Netflix, and those are the stocks that really did super well, and I'm going to show you those. Tesla did really well also, and AMD and some of the semiconductor stocks also benefiting from people needing to have more technology. They did really well also. So let's take a look as we switch over and look at Roku. This is, of course, a company that has hardware and streaming for your TV, and they did incredibly well. Now, this is not a good pattern overall, but maybe it is improving when we look at this. 34% gain on the week. Analysts all over the place. They're upgrading and they're downgrading. You can see what's going on here. Before this, recent couple of weeks, these earnings were being downgraded. This is a $127 stock that loses money. I can't see the justification for this. I think it's pie in the sky or streaming to the sky, and in my opinion, a ton of risk in this stock. And you can see our projections in there that we think between now and July, August, when we think the stock market will bottom from its next correction. A best case is this stock moving back under $100, maybe close to that 87, 88 support that you see way down over here. That's actually 86. So we don't really like it. I think that it got dragged up by Netflix, and I think there is reality risk in here. That this stock's not going to earn you any money for a long period of time. And that means you've got to catch one of these crazy upside moves that we think is on the way down. This, you can see, is that big upside. They love the stock. Here's the failure below that high. The major top that we called right over there, the negative configuration to the lower low, and the high probability of a failure in the sell zone. Maybe it's got a couple more weeks of trying on the upside. I don't like it. 34% up on the week. I think it's a sell. Tesla up 28% on the week, and analysts are starting to love this one again. Goldman says, well, the sales of electronic cars will surge in coming years. They put a target on it of 864. This is an improved pattern based on the analysis that we see and what we call a shifted cycle in here. So what we're looking for is this upper resistance sell zone to hold the rally right now. Again, just as we have in most of the stocks we look at, declines out into late June through early August are very high probabilities. This stock gets anywhere near this 6.25 down to about 560 over here. We think it's going to be a really strong buy. It's in the area it should likely stop, but 28% gains on this. China registrations up pretty strong. I don't know if I believe that. We're looking at the 9th straight up day in this stock. This is a weekly pattern right over there, and these 2 weeks over here hold 9 straight up days on this stock, and the shorts are getting creamed. I'm gonna just look for that June July low, but it's got to stop in here. And with something like 14% of the float short out there, you're getting a lot of these shorts scrambling in here to cover. So that's a stock that probably will stall and settle down again. But I think the prospects for it going out there, I don't know if Goldman is really that wrong when you talk about out in the next couple of years. AMD, this is a stock that we have loved, absolutely loved. Let's just look at these 4 cycles right in here, our cyclical projection that you see. So what we have in here are the cycle rhythms. These are cycle brackets. If you are new to our analysis, there is a dominant cycle right in here that you can see, and there is a minor cycle that you can see. And you can see each of these dominant cycles are made up of 2 smaller cycles, and we're showing you those right in here. The 2 smaller cycles right out of here got a bit out of alignment, but then the low here made right on time. Note that we also have the semiconductor ETF, which aligns perfectly with AMD. And then when this rising phase came right over here from the support buy zone, explodes to the upside. We talked about this is one of the few stocks that we really liked in here. It's now moving towards an all-time high, and our upside projections are about 61.5 to about 68.5 in here over coming months. Yeah, we hate the stock market. We think the stock market's going down again. I think when that happens and this stock gets hit, those are going to be buying opportunities. You can see how we've projected out the 2 minor cycles and the dominant cycle right over here, with the peak somewhere out over here in June, and then pulling back into August with the rest of the stock market there. So that's how we do. We extrapolate everything, the sum of the evidence and everything that we see, momentum conditions, cycle configuration, how it correlates with the rest of the groups and how it correlates with the stock market. And we come up with this sum of the evidence projections, and you can see it right there. Pretty beautiful. Up 17% on the week. We liked it, and it is a great looking stock. Amazon, well, that's up 16% on the week, or 15% now, because it's kind of pulling back a little bit. Through the roof, this big megaphone that you could see it building right in there. And at some point, and what makes the most sense to me is that if they're looking at a stock market that can look over the valley, then investors have to be looking at the fact that Amazon's dominance of retail is likely going to slow down or stop. This huge growth from COVID-19, you can see in there as the stock moves up in just 5 weeks from around 1,600 up to 2,400, a 50% gain that you see right there. When you look at the market cap of Amazon, well, that's the same thing as adding up the next 86 retail stocks. I mean, it is just nutty, the representation it has of this entire industry. Well, they have killed the industry, we know that. They are now testing all employees. They're getting ready to open all of their warehouses for the full deliveries, where they had closed a lot of it down except for emergency things that are really needed. It got up to that 100% of extensions right over there that you can see in that broadening pattern. What happens is when you top finally in the broadening pattern, you move somewhere down towards the middle of it. We're projecting, yes, out into July, a pullback to around 2150, and it could be somewhat worse than that in Amazon. So craziness going on here when you see that amount of buying. Netflix gets the same thing going on. NFLX, as that stock also surges up to, yes, all-time highs, and gets up to a high of just about 450, up about 13% in the week right now. It's been pulling back. Analysts now downgrading this stock. The valuations are just absolutely nutty in this stock. When we look at it, the PE right now is 70 plus. This is not a growth company anymore, as far as I'm concerned. These estimates have been upgraded, as you can see, but still trading at that high PE, moving up through this fib extension zone. You see these blue arrows here? Well, our members know that that's saying there's another extension zone up over here. Question is that the high at 450, or is it going to try for 500? Before it rolls over? I'm guessing this is the high right over here, but I wanted to put that in there in case crazy went to super crazy. And we're going to project this stock to having topped. And that I'm going to say the stock pulls down to about this 370 level. Yes, in July is what we're looking at. So maybe probably another 40% downside in here, but it's not going to give up that easily. It probably tries for that upside again before it's over with. So that you see is the best for the week. Some great moves that we saw in there. And now we're going to get into looking at the worst of the week. The worst groups of the week were clearly in energy, airlines, and retail. I'm going to show you some of those stocks in here, and you'll get a good sense for how something is bad just really continues to get worse. We're going to switch here from that Netflix chart over to Occidental Petroleum, OXY, and look at this. Stock makes a high of 87 back in the days when oil was worth something, and then moves all the way down to 9. Wow. That's what happens when you get into a depression in an industry, just absolutely collapse. Now, what we have in here is a 20% decline on the week, and I think that energy's the bottom is in. They're cutting salaries. They paid its dividend to Berkshire Hathaway, which owns a bunch of their stock, in stock, not cash. Not a dumb thing, actually. These companies should have to do more of that, use their stock to be able to reflate themselves. And they're doing everything they can to raise cash in here. I'm going to talk about the drillers right now. Halliburton was down 17%, Schlumberger down 10%. I'm going to switch over and show you that stock in Halliburton. Now, before we switch off from Oxy, you can see we're projecting it to pop up again, maybe to about 17. There's probably a long side trade in here for aggressive traders. But let's look at Halliburton right over here. Halliburton is a similar situation, and the story behind Halliburton and Schlumberger pissed me off. The Trump administration is looking at bailouts for the drillers. And you know how I feel about bailouts. I don't think companies should get bailed out at all. I think they should have to sell their own stock in order to get money, or sell bonds and dilute their investors and do everything they can. There should be no bailouts for any industries. Without them first, I don't care if they sell their stock to $1 in order to raise money. There has to be investor dilution first, and they have to do everything first other than reaching into the pockets of the people. But what I really want to talk about here is the buybacks. Halliburton, they bought back 1.5 billion stocks. Schlumberger, I'm not sure how much they ended up buying out of their $10 billion buyback. You want our government to bail out these companies that acted that frivolously, that didn't plan for the future, that had a sense that, well, the moral hazard. The government is always going to bail somebody out. They can always borrow money if they get into trouble. Well, I'm not in favor of that at all. So this stock, Halliburton, down on the week. And you can see we're still looking for a few upticks in there before it heads lower again. I think the stock goes sub $4 this year, but maybe it tries to rally to 10 first. Schlumberger down 10%. It's the same kind of a pattern in there. Also in the energy sector, Hess, the old Amerada Hess, but it's HES, down 17%. Devon down about 17%. Now, Hess, I actually think it's a short-term buy. I kind of like that pattern for another pop up in there. So Hess is an oil and gas stock. I think natural gas might do a little bit better in here. Overall, the IEA comes out and they lower demand for 2020 again. Like that's a big surprise. So any of these upward pops that we're talking about in this energy sector, I think they're just temporary. But I would not save any of these drillers at all. They got to save themselves. All right, now we're going to look here at the one stock in the airlines. The airlines got creamed again. I'm just going to look at a representative of that here in United Airlines. They are doing a lot of cost-cutting measures also in the entire group, and their bailout includes provisions for government ownership. Does that make you want to puke? It's unbelievable. It's almost like a government takeover. Why should the government own any of these companies? They should simply make the companies sell stock, make them sell bonds, make them do everything, and do what they need to do to survive. UAL down 10% on the week. And I think it's just outrageous about all of these bailouts. We're just looking for UAL to chop. It's probably made the low at 1780. It probably will try to trade back up into the mid to high 20s. And here you can see our projection is that it really doesn't turn down again into June, which is what we kind of think for the market, May, June, and then getting hit hard into July. So this is what it looks like. This is a good picture of the rest of the group. They look horrible. The stock's not going to go anywhere with government taking over a lot of the company, and the fact that the government's giving them $25 billion to pay salaries, to me is just, who could ever guess something so stupid would be done like this without making these companies raise money on their own. Did I say that enough? Do I have an opinion? Yeah, you better believe it. Let's take a look at retail. And I talked about retail and how much they're all getting devoured by the likes of Amazon. Of course, it's Walmart and Costco, and those are all other companies that are doing well online. Let's take a look as we look at JWN. That is Nordstrom. So here you could see it kind of bottomed as it was supposed to. You can see the big cycle patterns right in here. I hope you've been recognizing the cycle patterns when I'm not calling them out to you. 15% down on the week, falls from that resistance zone right over there. Analysts downgrade the stock. They suspended their dividend and their buyback program. Man, oh man, I'm completely against the government outlawing buyback programs. And I'm completely in line saying that the government should not bail out companies that have had buyback programs and didn't save money. So this stock down down about 15% on the week on these analyst downgrade. The dividend is suspended, and we're going to see a lot more of this where retail comes. Expect a lot of chop around in this area. Also, short term, that intermediate term bottom in, maybe it tries to get back here over $20, $21, and then likely gets hit pretty hard again. Also, one more stock I'm going to show you in this group is Dillard's, DDS. And there is your Dillard's pattern right over there. Notice the cycle rhythms. They're perfect. Just absolutely beautiful. And what that means is that this bottom is in place at 22.5. They lost 14% on the week. I think it's a short-term buy. What do you think of that? I think you could see this stock trade back over here to that 23% at about $37. That would be about a 35% gain in here. Yeah, I don't think the market's quite ready to roll over yet and get slammed. I think it's going to chop around, and the stock probably is going to get some kind of a lift. So for short-term traders, I kind of like that. In the group also, Kohl's KSS is down about 10%, and I think that stock is in a lot worse condition. And I think it's going to take another trip down to 10. So that is the worst for the week, and some pretty strong opinions for me, as you can see, when it comes to the government and bailouts and how they're handling this double crisis that we're in, of a medical crisis and a financial crisis created by the government. All right, so now let's switch over from my opinions over to some more of my opinions. We're going to look at the investor pulse. Now, what I want to look at now, a little different. We're going to take a look at the confirmation of what I'm going to show you in the Slimulator Momentum Tracker. But first, I want to show you some charts that I think are pretty interesting. Our focus is going to be on energy in this investor pulse because a lot of people are looking to buy these stocks in energy, and this is light crude. Wow, what a chart. Is that amazing? Well, what's on this chart? Well, it is all the way back to 2009. So it's about a 12-year look at crude oil. I want you to see there are repeating patterns in here that are crystal clear in these cyclical patterns. Some of them are a little bit off, but that's the principle of variance. Now, if you take my cycle analysis workshop, which right now we are offering a special 30% discount on, write Matt at askSlim.com to learn about cycle analysis. We want people to be able to learn this because they're spending a lot of time at home, and this is a 20 module, 15 plus hour workshop that you will have forever if you buy it. It's not it's really a long-term investment because you're going to have to go through it many times. And there are many videos linked to this out of our entire library. You're really going to watch 30 videos or more. So it's just a amazing teaching, and I'm going to teach you about how to recognize and understand these cycles. One of the video modules in there talks about how cycle patterns form chart patterns, and you can see the head and shoulders formed in here by these cycles. And once it broke the neckline, it goes from the top of the head to the neckline and measures down right over here. You could see it made the downside measurement and more. These cycles are pretty much 15 to 18 in length. So what does that tell you? Right over here, we're at 16 months right there. So, what we're looking at is a picture of money flow, and money has been sharply moving out of this group right over here, and it might have maybe another month or so like crude on the downside, maybe a little bit more. Remember, it's 15 to 18 months. This is the 16-month low right over here. It's a little bit early, so we're kind of looking for some test of that area on the low about 19, and then having a time period over here over coming months when it moves back up to around $30. So I wanted to show you that it's a little bit premature, and I'm going to show you more about that as we look forward. So that's a look at the monthly in oil. Remember, this is Investor Pulse, so we're talking about when it's probably the right time and how you will know to invest in energy and energy stocks. I'm going to move over to the XLE, which is the energy stocks, and show you a very similar picture in the cycle rhythms. Here you could see we have a comparison between oil and the XLE right over there, and the bottoms coming in here in about another 1 or 2 months likely. So that's another good picture about the energy stocks. They have fallen as they should. Now when you get into the second half of cycles is when the downside risk comes in, and especially at a major sell zone right over there, downside risk, and then when you get to the other side of them, upside bias, upside bias, upside bias, and this one starts in a couple of months. So if you want to be buying energy stocks, or if you're already in them, you probably are looking at some more pain in here for a little bit of time, and then again that period out over here where you're likely to see them do better because the bargain hunting comes in a little better time into the market, maybe late into this year, maybe even into early 2021 right over there. It's premature based on what we just looked on the monthly in the XLE and in oil. You're probably going to have to sit through some difficult situations. Now, what about the momentum in these things? How will you really know? Well, I'm going to switch over to our momentum tracker right over here, and I'm going to pick a watch list in here that is the energy. We'll just look at the XLE, and there it is right over there. Our directional bias indicator right over here, which is that pie chart, essentially tells you that of the stocks in there, 50% are negative bias. Only 4% are positive directional bias. This is a pretty bad reading when you look at that. So just so you, for those of you that haven't seen this before, this is included in all levels of premium memberships, 1, 2, 3, and 4. And you get an idea here, the company, the directional bias, bearish, what the investor outlook is for 3 months, and then the momentum conditions or those readings for the long-term, intermediate, and short-term. What I want to do is I just want to switch over here and look at the long-term conditions. Now you can see directional bias is 50% to 4%, the rest neutral. If I look at long-term momentum, 96% and 4%. So you have an overwhelming amount of negative momentum in the energy stocks. So there's your directional bias. That was your long-term momentum right over there. What about your intermediate-term momentum? Well, that's kind of improved, right? You can see it's just like the directional bias, 50% and 4%. And if I go to the short-term momentum, you can see in here 89% neutral, 11% positive. So what's really clear is you're getting a rally right now, or some upticks in the energy sector that lives within a very terrible long-term momentum condition, and hence there are so many of these stocks, I'm just going to scan on the directional bias right over here, that are really bearish. It's going to take a long time for these to get fixed, and you can see in the group there is almost nothing other than COG, which is slightly bullish in here. So you get some slightly bearish to neutral readings, but overall this group is really sick, and I wanted to show you that so you get a good sense for the conditions of the energy stocks, the energy group, light crude. It's pretty, it looks really like we're having we'll probably have another washout before these bottoms are in place. And that's when you start thinking about nibbling on this group. And, you're going to really have to get a good sense for momentum conditions improving before you can get any real upside in there. So I wanted to take that deeper look in this investor pulse at the energy sector. Please do write me and let me know, slim@askSlim.com, how you like it when I keep these investor pulses in there. I want to hear your commentary. You don't like investor pulse? I'll pull it. This is a very, very long show. So your opinion are the ones that are going to tell me whether or not you want me to keep this in the show. All right, so now I've got a little quickie thing. Do not fast forward. You don't want to miss what I'm going to show you right here, because what we're going to do is talk about our special level 3 trial that we're running right now. This is level 3 is very unique. It has our very advanced simulator ranking system with our algorithms in there. This is like what I just showed you in the simulator momentum tracker, but actually gives you a lot more. We take the 84 best trading symbols, that's stocks, ETFs, indexes, and futures, and do our analysis in them. We show you momentum analysis, the directional bias, and give you our market outlook for the next 3 to 6 weeks. And then give you our trade ideas, 1 to 3 a day that we put out, which is our sum of the evidence analysis that can give you the best entries. Importance of entry is that you have a less of a chance of getting stopped out, of entering poorly, of the trade going wrong because you have an improved entry. That's really what we look for. And we do that from our universe of over 300 stocks, ETFs, and futures. So that's where the trade ideas comes from. And we're running a special trial now, 1 to 3 months, and you can write at matt@askSlim.com. But I want to show you a little bit more about that before we move on. I want to switch over and see, this is the momentum tracker I just showed you, but now I want to show you the simulator ranking system. You see, these are kind of close cousins to each other, but they give you different information. Instead of being for 3 to 6 months, it's really for 3 to 6 weeks. And we give you our directional bias in each of these also, the long-term, intermediate, and short-term, and we add in our option bias indicator. When Amazon went to P1 orange, that is an extreme overbought condition and very likely to reverse, and that's what we're showing you right now. But what also is great about this, our level 4 members get our live charts, and if you want level 4, you'll get our charts on Thinkorswim platform. We just give you the uploads for that. But as you can see in here, we also have the charts in here in static version. So I'm just going to blow that up, and there's your Apple chart with our information on it right there on the weekly pattern. Here's your Apple chart right over there with everything on the daily pattern. And we have this for all 84 of the symbols that are in our focus list with our directional bias indicator. So you're going to get that, and you're going to get our trade ideas. You see right over there, I'm not going to click on trade ideas right there, because if I do, it's going to show you our page with all of our active trading ideas. You're going to have to take a trial membership in order to see that. So this is really a really fantastic piece of equipment, an app here that we have that you'll be able to get. You can scroll on here. You could see which are the best and worst long term. You could see the best or the worst short term. You can see the OBI indicator, or option bias indicator, the ones that are really negative, all the ones that are really positive, or the ones that are showing you the extremes of P1 orange or N1 orange, likely to reverse. Look at that. Amazon, super overbought, likely to reverse. Costco, Newmont, Walmart, and GDX. Those are the ones that are highly susceptible to be pulling down right now. I just wanted to show you that, even though I kept you from seeing our trade ideas. I really want you to subscribe to the trial to get that. All of that in level 3, but that's not all. Why do I sound like an infomercial here? Also, you're going to get our SAR daily live stream. Look at this. This is magnificent. The S&P 500, NASDAQ, and the Russell all in here. This is actually a snapshot of today's, just from maybe an hour ago. And you get our reversal scout, as you can see in here. Important support, resistance levels, areas that it's likely to move through are yellow. Those are acceleration zones. And you can get just the most magnificent picture of relative strength to each other if you're a pair trader. Look at this. We thought the Russell was going to get stronger. We thought that we were going to get a rollover here in the NASDAQ, and it's just really so clear. So this is just amazing. You get that, the SAR live stream. In fact, if you do become a level 3 member, you're going to get everything that's in level 1 and 2, all of that content. Our stock index report daily, our stock index report live stream. You get that at the opening every single day. No matter what platform you're on, you're going to be able to stream that. It doesn't matter. You get our weekly stock index report, our weekly ETF review, the Slimulator momentum tracker that I just showed you, looking at the investor pulse, and our entire our entire library of over 500 videos in now 9 categories, because we're bringing you our live events in there, videos of our live events and our briefs that we do, or so many other things. There is so much in here that you're going to get. Can you imagine the special trial, 1 month, just $49.50. Right at matt@askSlim.com. He's going to send you the link for that. He'll also send you a link for a 3-month special if you'd rather do that. So this is the amazing, amazing content that we have in our level 3 trial. Just incredible. You're going to get all of that, everything I showed you, the live stream, all of this stuff, 1 month, just $49.50. Give me a break. Okay, you know what? You know how many years, decades of work come into all of this, and our amazing team that works on this, RV and Matt and Brian and Tom. I mean, we have so much going on. Please do take one of our trials. $49.50. You help us keep bringing all of this great stuff by supporting us. All right, so now we're going to get to our short-term view of the major markets in here. 5 major markets. Do this all the time. I take an accountability of how I did as we look out 1 to 3 weeks in this short-term view. I would say overall we were not so good. We rank ourselves at 50% this week. I always want to be somewhere around that 65% level or better. That's 2 to 1. We were wrong in the stock market and the bond market. We thought that the stock market would roll over sooner. It hasn't rolled over yet, except that maybe today giving ground from its highs, but we were expecting the stock market to move down, and it has not done that yet. Overall, I think that's going to be reflective of what is just a modest decline coming, and I'll show you that over the next week or so. I'm not talking about later, where I think it's going to be big down. And the bond market was expected to have pressure come in, and that didn't. That was an up week, so we were wrong in both of those. We were about half right in the dollar, and we were very right in the oil and the gold market. So we get 50% on the week as we look at that. Now let's move over into the chart. So we still have that Dillard's up there. We're going to switch now, and we're going to move into the light crude market, and we're going to move over into the daily chart, because that's what we look at here is the daily charts. Our focus when we do this projection is on cycle patterns, momentum, and our swing high, swing low analysis, which throws off the support and resistance zones. That's what we look at in here. Now, this actually is this rolled, so the prices are different than the ones we were discussing last week. There was a massive contango in there, what happened was this week is that there was a lot of disappointment over the deal that we talked about earlier in the show from OPEC Plus, and it really moved down, as you can see. Plus, when you have this big contango situation where there's a wide spread between the cash and the future, what happens is that often the future starts to catch up after it becomes the front month, and you have that going on right now. So we're actually projecting this cycle having broken down and likely to be moving down again. We see that this likely is any rallies in here are likely to fail. Here's where the momentum turned negative right over here. If you don't have the slim ribbon on your charts, well, then you're missing the best momentum indicator there is. So you can see in here the slim ribbon moving down, the confirmations on the projection oscillator over here as it gets each time into the sell zone, and you continue moving down. This is still a negative pattern. We talk on another 1 or 2 months of problems for energies, and you can see us projecting that out over this way. Probably try to get some rally, but we think it's continued to move down back towards the $19 number. Momentum negative, really disappointed in that deal. Supplies are huge out there, and overall, this is really bad. It's really a bad pattern. Take a look at the gold market now. Our expectation was it was going to move up to between the area of 1762 and 1845. It got up here to 1788.80 and then rolled over. We're looking now, we have slightly lowered our projections and targets in here right now. There is about, we'll call it 3 to 6 days of decline ahead of us right over here to continue this correction. These supports were brought over from the weekly chart. And what that says to me is that there's a kind of a likelihood that over the next week it's going to be testing down over here around 1660. The slim ribbon often gives you some support, so you can see the lower moving average in here maybe at about 1675. That area, 1675, 1660, is a very reasonable target. Now, momentum still up. That will keep this kind of shallow. Then we get into this upward period over here, which is the next 2 weeks after that. So it's kind of a week down, maybe a week or two up, and then down again. 1660-ish, move up here, maybe back up into the 17s, and then down again with a shot at around 1618 down over here, before we get into that next potential move of some significance right over there. So we're giving you the 1 to 3 week look in here. Momentum still strong on all time frames. So we're looking for correction in here, but it won't be a crash because just all the momentum is really strong. It's a correction into the springtime here, and then probably another good sized lift out into summer. So it's kind of more than a short-term view I'm giving you, isn't it? $ DXY, the dollar, this is in a tightening up range in here. Now we have what might be a big diamond that's forming. So here's your broadening pattern right over here, the buying panic on the world economic collapse, the selling panic on QE infinity, and then this narrowing range that's going on. We think ultimately it is going to roll over and break on the downside in some significant way, but right now we're still projecting this tightening range to go on. Maybe get down over here. This is 98.35, maybe down to this support here just under 98, and then moving up again. Tightening range. The risks of moving down to 98 area are growing. We see maybe 3-4 days on the downside, and then in this narrowing range trying to rally. Momentum, which was strong over here and we warned was weakening, has now been lost. It's now neutral. So we're not getting any momentum messages out of this right now. And that's what happens when you get into a tightening range. It's just kind of stuck in there. That's kind of what we think it's going to remain, kind of stuck. There's a huge battle going on. The sum of the evidence really is suggestive that the battle is between what is a very weak euro currency supporting the dollar, because the Eurozone is in real bad shape, and the printing pushing on the downside, as people are scared to death of the value of the dollar, based on the fact that the U.S. government is trying to liquefy the world and will print as many dollars as they think it takes, even if it's another 20 trillion. I mean, that's nothing to them. We're living in the world of MMT, and that insanity is taken on by people that are supposed to have a brain. So that all that massive printing is meeting up with the weakness in the EU, and that is kind of the battle that's going on right now. So let's take a look here as we switch over to the bond market /ZB. So here is the bond market /ZB, and we'll take a zoom in here. We thought that this sell zone was going to get this rolling over already, and that this had happened. Now you could see in here the momentum was established on the upside way back here, and momentum has continued for all of this period from January. It's still positive. It is starting to fail, but not quite enough. As a matter of fact, we keep getting buy indications right in here, and we're looking for it to roll over. We think that's going to happen in the next couple of weeks, and that we're going to get a decline. Our targets remain in here. This is right around 170, right around 167 into May. The intermediate patterns are pushing down this way, so the sum of the evidence is that since the 10-year yields are patterns are showing that they should tick up, and this whole complex of futures are showing that should tick down, we think it's pretty likely. Softening in momentum, but all momentum still remains to the plus side, and therefore this is kind of a mild decline right over here, not even getting down, maybe getting down to this panic low in here, and testing that level, but then we're probably going to be in a much better period over there. So this is the resistance zone, the sell zone, the likelihood of a decline. It just didn't come yet, and that made us really wrong about what we were talking about. And now we'll take a look, and here is the stock market. We're going to look at the S&P 500, but I also want to talk about the Russell. We had expected that the market would roll over and we'd see a dip to 25.66 we said in the next 1 or 2 weeks. Well, that didn't happen, and there was an improvement in momentum right now, so that's going to raise our targets in here as time passes by. We talked about that last week. As we'll switch over here and look at the S&P 500. What we said last week is that the longer the market holds up, the higher the projection is going to be, and the less time there is to fall. It did hold up, and you could see right here as it was looking like it was trying to roll over. Momentum got neutral right over here, as we talked about last week. Momentum turned positive right over here, and now we're using up all of the corrective time. Here's your day here right over there today, and that is suggestive that there is only something like 3 to 5 days of correction right over here. We've raised our projection right over here to about 27.20, 27.30 right in here, and then likely moving up again. So that's still 115 points on the downside. This is the older projection. We left that in just in case we start to get some really big selling, but I think it's very likely that you're going to get a minor dip right in here. Yes, minor, over 100 points in the S&P over the next 3 to 5 days, and then moving up again. If this turns out to be one of those really shallow things in here, then the odds are going to be high that we're going to get above that 29.50 area right there after this correction is over. So what we're really looking for is a pretty good size move, a move down towards this 27.30 area, and then a move back up towards this 29.50 area, kind of a chop in here. And then out over here is where those risks are going to pick up again significantly to the downside, but not now. This is a bullish pattern that's going on. It's this intermediate pattern and this improved momentum situation that says look for a correction, look for it to be mild, probably worst case 2730, and then probably pushing up here towards the 2950 area. Don't look for the NASDAQ to be the leader in here. We think it's going to be the Russell that is going to be the one that actually shows more strength in the market, and we think that the pair trade of the Russell versus the NASDAQ is going to be a pretty good trade. Some of the evidence is intermediate momentum is negative. The monthly pattern's turning down in a really big way, and we think that what we have here is a big rebound in a big bad bear market going on. So we're going to look for this choppy situation in here, prices falling but not staying down, and then moving up back towards that 2950 area before this upside correction is over. I hope that you found that information to be incredibly valuable, and that everything that we show you is valuable, and that you can adopt that to your own trading. Our philosophy here is to bring you the best analysis we can, and you to be able to adopt and adapt into your own trading plan. That's what we want to do. We don't really give you buys and sells, stuff to buy and stuff to sell at specific prices. We just bring you the analysis so that you can raise your odds of success and be much, much better at what you do as you engage in the markets. You can earn more when it goes your way, and you lose less when it's not. That's really the key to this success. All right, make sure that you write to Matt at askSlim.com for that special level 3 trial. He can give you other levels of trial also if that's what you're interested in. So write to Matt at askSlim.com. That is it. Wow, what a show. How amazing, and love to hear your commentary. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been